Today, we're diving into a really pivotal moment for one of the world's most influential industries, oil and gas. I mean, for decades, this was the engine of the global economy, no question about it. It fueled our factories, it powered our cars, and it basically built the modern world as we know it. But today, that dominance is being seriously challenged. This massive industry is now staring down a wave of changes that are so profound, so fundamental, that were frankly almost unthinkable just a little while ago. Okay, so here's how we're going to break this down. We're going to look at 6 key parts of this huge shift to really get a handle on what's happening and, why it matters so much. First up, a world in transition. We need to start by looking at the 2 powerful and totally intertwined forces that are really pushing this entire industry in a brand new direction. So let's start with just a number, -85%. What in the world could that be? Well, it's a figure that has completely turned the world of energy economics on its head. That's right, an 85% plunge in the cost of solar power in just a single decade. This isn't just an environmental talking point anymore. We're talking about pure economics. In a lot of places around the globe, renewables are now just flat out the cheaper way to make new electricity. And the second major force? It's policy. That powerful economic trend has some serious political muscle behind it, thanks to the Paris Agreement. This is a massive global consensus that pushes pretty much every country on Earth to create policies that boost clean energy and, well, move away from fossil fuels. So you take those 2 things, cheaper renewables and global policy, and what do you get? You get a really intense economic squeeze, with pressure on the oil and gas industry now coming from absolutely every direction. One of the biggest challenges here is just the sheer uncertainty. I mean, just look at this. You've got major influential groups with forecasts that are worlds apart. The International Energy Agency, looking at a climate-focused future, sees demand just falling off a cliff. But then an organization like OPEC predicts demand will stay strong for decades. How on earth are you supposed to make billion-dollar investment decisions in that kind of environment? And this uncertainty creates a huge risk, which is captured in this key term, stranded assets. Just imagine this. You spend billions to build a massive new oil project that's supposed to pay off for 30 years. But what if, in just 10 years, the market changes and the price of oil craters? Suddenly, that project is worthless. It's now a stranded asset, and it could mean billions in losses. And it's not just market risk. There's direct pressure coming from Wall Street. Divestment campaigns are picking up steam. Big investment funds are using these ESG scorecards to make decisions. And all of that is making it harder and more expensive to get the cash for new projects. It really puts a company's reputation, its whole right to do business, on the line. So what's the industry's response to all this pressure? Well, they're not just standing still. A huge part of their strategy is to make a massive gamble on some really complex, really expensive, and in many cases, still unproven technologies. One of the biggest bets is on something called carbon capture, or CCUS. The idea is you basically grab the carbon dioxide right at the source, say a power plant, before it gets into the atmosphere, and then you bury it deep underground forever. It's a really interesting idea for cleaning up existing operations, but, and it's a big but, it still has enormous hurdles to overcome with cost and just getting it to work at the scale we'd need. The other huge bet is on hydrogen, which a lot of people see as the ultimate clean fuel of the future. But here's the catch. Not all hydrogen is created equal. People talk about a hydrogen rainbow. You've got green hydrogen, which is the dream. It's made from water using renewable power, so it's totally clean. Then you have blue hydrogen, which is made from natural gas, and you use that carbon capture tech we just saw to trap the emissions. It's often called a bridge fuel, but it still relies on fossil fuels and on carbon capture actually working perfectly. So these high-tech bets are all part of a much bigger, much more fundamental rethink of the entire business. And this is where things get really complicated, because it leads to this core, almost paradoxical challenge. So you hear all the talk about going green, but let's follow the money. Where is it actually going? For most of the big oil companies, low-carbon projects are only getting about 20% of the investment. The vast majority, 80%, is still being plowed right back into the traditional oil and gas business. And that brings us to this quote, which just absolutely nails the problem. It's a challenge we can call the transition paradox. So here it is, the incredible bind they're in. To pay for the hugely expensive shift to clean energy, to build all those hydrogen plants and carbon capture facilities, they need massive, reliable profits. And right now, where do those profits come from? Their oil and gas business. But every time they invest in that business to keep the money flowing, they get hammered by the very people demanding they change. It is a strategic tightrope walk unlike any other. Now, this whole transition isn't just about corporate strategy. It's so big, it's about to fundamentally remap the entire global balance of power. For the last 100 years, geopolitics was pretty simple. Power came from who controlled the oil. The 21st century, it's shaping up to be totally different. Power is going to flow to countries that control the critical minerals. Think lithium, think cobalt, and the ones that master the technology for clean energy systems. And this creates a whole new set of risks for energy security. We might become less dependent on oil from one part of the world, but much more dependent on, say, lithium from another, or rare earth mineral processing from another. And the nature of renewables itself, the sun isn't always shining, the wind isn't always blowing, that creates brand new vulnerabilities that are going to require huge investments in making our power grids more stable. So, to wrap this all up, what we've seen is an industry at a truly historic crossroads. It's navigating this perfect storm of economic, political, and social pressure, all while gambling on new tech and walking that strategic tightrope we talked about. But when you step back from the balance sheets and the engineering diagrams, you start to see that this is about something much, much deeper. It's actually changing our fundamental relationship as a society with the energy that powers our lives. And that leaves us with one final, really crucial question to think about. As the very sources of our energy are completely transformed, what is the new social contract? What are the new responsibilities and expectations between the companies making our power and all of us who rely on it every single day? The answer to that question is really going to define the world we live in.